You see this all the time. Traders on Twitter, on YouTube talk about portfolio allocation, they talk about risk management and how important it is, but all they do is end up showing you some confusing graphs or some sort of splatter chart to give you an idea of how cool it is, but no practical tools. Whereas Altrady has this already built into the platform, and I'm going to show you exactly what to look for and how to use and understand risk management to have a more profitable trading portfolio. Hey guys, this is me, Moon Papa. I have courses on thebettertraders.com where I can teach anyone how to become a better trader. Last year, I made a video about portfolio allocation. I believe it's called Portfolio Allocation 101. I'm going to link that video to the end of this one because after you watch this video, you've got to watch that video. It's going to fill in a lot of the blanks as I talk about the tools that are available here on Altrady. But the main thing to keep in mind as I show you these different aspects and tools and features in Altrady is that when you use a crypto trading tool like this, a crypto trading platform like Altrady or Pinex or 3Commas or whatever, you need to leverage all of the tools, all the features of these platforms for your benefit. So even if you're someone that only likes to open up manual trading positions, you need to figure out how much of your portfolio you want to allocate to automated trading, like bot trading, like I do. And vice versa, if you're really heavy on bot trading, you need to figure out how to leverage the active trading tools on these platforms. That way you're leveraging both sides, even if it's not even. So again, that's what that video is going to explain. And you're going to see some of those features already built in here to Altrady. Here's the thing you have to understand about risk management. The first thing you need to know is that not every trade that you set up will be profitable. In fact, really amazing traders like Gareth Soloway suggest that you should go into almost every single trade. Actually, he says every single trade, not almost every single trade, and look at the loss and figure out, are you willing to lose this much to take this trade? Are you willing to lose that much to gain this much? Most traders have it backwards. For a long time, I used to look at charts thinking, I can't wait to make that much. Now, if I'm using a specific strategy and it's DCA, well, then I'm going to be patient. I'm going to trade that chart like it's a DCA chart. Okay, there's a different way to trade that. So in those instances, I'm not going to use a stop loss. But if I'm making a swing trade and I have an entry and I have my exit on the top side for profit and the bottom side for stop loss, for a long time, I just thought about, well, I'm going to make this much on this trade. But in reality, that's the wrong way to look at it. Because sometimes you get too greedy when you set your take profit targets, right? Sometimes you set it up super duper crazy high because the market's bullish and euphoric and you've seen other charts pump, so this one has to be next. There are no guarantees like that. So instead of you getting excited looking at the moonshot, it's better to figure out what are you willing to lose to open this trade. Doing this will also it should reduce the number of trades that you open up. Part of good risk management means that not only are you using good percentages of your portfolio for your trades, but you are being more selective with your entries. You're not just going and looking for trades. You're not looking and seeing, oh, I want to open this one and this one and this one. That's not what a good trader does. A good trader is going to wait for the right opportunity and execute. It's not just looking for trades. There are times to do that. This market isn't really the time, in my opinion, okay? Maybe you've seen a chart like this floating around on the internet, something similar to this. I want to explain this real quick, and I'm sorry if it's a little bit blurry, but it's blown up and it's a really small image, but I think you'll get the picture. So this is a risk-reward table. It's going to tell you based off of your win rate. If you only win 20% of your trades, all the way up to 60% of your trades, what you might want to consider setting your take profit and your stop loss at. That's essentially what it is. So risk to reward, sometimes it's denoted as R:R, just shortened to that. So that's what we're looking at over here. That's the ratio right there. So 1-to-1 means that you're willing to risk an equal amount that you're willing to take profit at. So if your take profit is set to 10%, then your stop loss would be set to 10%. So it's equal, it's 1-to-1. In order for that to happen, in order for you not just to be profitable at the break even, of course, you have to be right 50% of the time. But in order to be profitable long term, you need to actually be over here. You need to be closing in the green 60% of the time. So keep that in mind. So coming back over here, The reason why the numbers increase on the left-hand side is this is how much the reward is moved up. So the risk is over here. So if your reward is 2 times greater than your risk, then you need to get to the 40% win rate in order to become a profitable trader. So in the same instance of 10%, so maybe this is still going to stay 10%, but now we have to reduce it in half. So this would be 5. So we're looking at a take profit of 10, stop loss at 5. And then we just keep going. So a 3-to-1 would be a take profit at 10, but your stop loss would be at 3.33333333. And 1-to-4, 1-to-5, you get that. So in order for you to be a profitable trader, you're going to have to do one thing. You're going to have to think about this. You're going to have to think about your risk to reward ratio. There are lots of trading platforms out there. I think Altrady does this the best because it has a risk to reward calculator in it. Now, for those of you that use TradingView, there is a tool that you can set up a long position or a short position, and you can click and drag the stop loss and a take profit. And then in the middle, you can see that risk to reward ratio as basically this. It'll say like 3.0, which would basically be 3-to-1, or maybe it's 1.4. So then it would be 1.4-to-1. That's not very good. In my opinion, you want to aim for at least 3.1, meaning that either your take profit should be 3 times greater than your stop loss, or your stop loss needs to be a third of what your take profit is, roughly. Hopefully that makes sense. Thank you for watching this video. These are fun to film, they're fun to think about, and they're fun to edit, but it honestly takes a ton of time. So to better let me know that I'm on the right track making videos like this, I would love for you to hit that like button. That way it's an indicator for me to keep making more videos about stuff just like this. Plus, if you can take a little bit of time to leave a comment of feedback, whether it's positive, negative, constructive, I can take it all. And I would even love it more if you could share this video on social media, so that way it helps my YouTube channel to grow. So thanks again for watching. There's a lot more, so stay tuned. Here we go. So again, another example. If I'm looking at a chart and I want to make a 3-to-1 risk to reward ratio on this, that means that I need to secure 30%, which means that I'm going to place my stop loss at 10%, or I could even shave off a 0. If I'm scalping with leverage, I want to make 3%, but I want to risk 1%. That would be a 3-to-1 ratio, whereas 1-to-1 would be risking 1% to make 1%. Not a good win rate. You're basically going to have to have an incredible system that you're profitable 60% or more of the time, which is unlikely. So with that said, we understand now the importance of having a good balanced risk to reward ratio where we want to be winning 3-to-1. We want to be closing in the green at least 1/3 of the time. Okay? So with that in mind, let's go ahead and check out Altrady. I want to take a second to show you how to build an order in Altrady and pay attention to that risk to reward ratio. So I've just picked a rudimentary chart. There's no real reason why I'm picking red, so don't be like, oh, he's picked this chart. This is the one I wanted. No, I mean, I'm just showing you as an example, okay? So I'm going to go ahead and choose to place an order right here at the bid price, which is very, very, very low. This is USDT. And now I can figure out how much of my portfolio do I want to put in this account. So out of my available quote currency, I want to put in 10%. So that's going to tell me that I can buy this much of the red tokens. Okay, I'm going to open up my take profit and my stop loss. So by default, right here, it says price 8.87%, stop price is 8.8%. So that means my risk to reward ratio is 1. If I increase my take profit up here to, let's make it 16. Well, then I should get 1, or actually it should go up to 2. Let me fix this to, -8. Right on the money. Now it's set to 2. So if you think back to that graph, I don't like this. I really want to make sure that I am profitable with this. So what I would have to do is I'd have to go 3-to-1. So I can't fix this. I wish I could just type in 3. But that would change a lot of things. So we just have to use a little bit of simple math. So let's change this to 5, and we're going to set this to 15. So there we go. My take profit is 3 times greater than my stop loss right there. So that means my risk to reward ratio is 3. And zooming in, we always want to look at the chart to figure out where's support, where's resistance. Do we think that this is a good idea? Not based off of anything else. We just want to take the time to look at the chart. So that might mean that, well, I'm going to have to change this a little bit because maybe the price could fall and I don't want to buy right here. I kind of want to buy a little bit lower, right? So as you move your buy price, it's going to move your take profit target. See that? But the stop's going to stay the same. And that means the risk to reward ratio is going to be automatically updated and recalculated. So if I decide to enter here, it drops my risk to reward ratio to about 1.6 to 1. Not good. And of course, if I drop it down here, well, now I get a risk to reward ratio that's near 4, which is really good. 4 to 1 is amazing. But just keep in mind that visually, well, 4 to 1 or even 5 to 1, just for the sake of an example, I want to show you what that 5 to 1 risk to reward ratio looks like. It looks like this. So we are looking to make 5 times our investment where we're only willing to risk one part of it, basically. So I'm willing to risk 3% to make 15%. Now, while that sounds like, okay, sure, when we look at that on the chart, that is a huge spread. Notice how tight the stop loss is right here. So when we think back to that graph, yes, it makes sense that we're going to see a lot of these trades close in the red, but the ones that do close in profit are going to be very profitable. So what about setting up a new trade? Well, there's something else that you can do that's a new feature that's on Altrady that I think is really clever, and that's allowing you to update the amount of your portfolio or your currency balance that you want to risk to enter a trade. Most trading platforms give you the ability to set a percentage, and those percentages are based on the available quote currency that you need to trade. So if it's like 10% and you have $1,000, then of course it's going to be $100. But an interesting thing that's available on Altrady is that you can now think about it risk first. So instead of thinking about the reward that you're going to make, they actually have an input field on the order form that allows you to put in a percentage. So based off of that percentage, you could say, well, I want to risk 1% of my total account's value on this trade, which will crank up, depending on how much you have, it should crank up the amount of funds that you'll invest into the trade, but it could also increase the loss. So let's say that you have $1,000 in your trading account. So depending on the settings of your trade, where your take profit is, where your stop loss is, if you set it to 1%, then you're willing to risk $10 for this trade. And depending on where your take profit is, then that's going to change the amount of your funds available for that trade. So it's an interesting way to think about placing these trades directly on Altrady because you're able to see what your overall loss is in comparison to your total available currency for the quote. So the unique thing about this with Altrady is that you're able to see the percentage of funds that you're willing to risk based on your total available quote currency. Based off of the amount that I have here, it's updated. So it now says 10%, sure. But let's say that the total possible loss right now is about $14. And the percentage of my currency balance, which is USDT, that means it's 0.3%. So if I want to increase that to 0.5%, that means that my total possible loss doesn't change, but the amount changes. So I'm now willing to risk 24 USDT to now make 120 USDT. So now we can see that nothing really changes here, but when I update the currency balance risk percentage, now we can get into some bigger numbers. So if I want to risk 1% of my total possible balance, it's going to cap me here, because if I'm looking up here, I'm looking at 1,600 USD. So that is basically, we're not able to go up to that value. So it kind of caps me out right there. So I can't go up to like 10% because it's only going to let me go up to the maximum possible loss, which is 3%. So and also notice here, I've moved it up to as high as possible. So that means my buy is a lot bigger for this much. So basically it's going all in. So I don't want to do that. So let's bring it down to 1. And we're going to see that this number drops down. So this is beneficial for me because as a trader, if I want to risk 1% of my account for a trade, and I want to make sure that I have a good risk reward setup right here, yes, losing $50 would be basically 1% of my account, or $48 would be 1% of my account. But on the upside, if it closes in profit, then I'm going to be making a nice 15%. But that value right there is significantly larger than what I'm willing to lose. So that's why having a risk reward ratio greater than 3 is really beneficial. So let's go ahead and just drop this down to, let's see, let's make this to 10, a more arbitrary number. So now we're almost at 3. Actually, no, it'd be 9. Sorry. So now we're looking at 3 to 1. So I'm still looking at losing 48 USDT, and I'm gaining a little bit less, but now this is a little bit more conservative. I say this because anything tighter than 3 to 1 is risky, because you don't want it to be lower than that. Again, because it's going to take so many more wins to offset all of the losses that you're going to have. Whereas if you have a risk reward ratio that's greater than 3 to 1, something that's like 4 to 1, 5 to 1, yes, you're going to have something a little bit crazier like this, where you're expecting the price to shoot up 15%, which is quite the move depending on the chart, right? But even if we take a loss, all we need is a couple of these wins to offset our losses, and there we have a profitable trading strategy. It does depend, of course, on what you're using for your entries, how you're looking at support and resistance, if you're using indicators to help you make these decisions. But just to show you that using the risk reward calculator is really beneficial to help you figure out a profitable risk reward management, so that way you have a potentially more profitable account long term, as long as you follow your trades and your trading plan. The next thing I want to show you over here are the portfolios. So when I open this up, we're looking at my portfolio here for KuCoin. So you can see it over time. It's done pretty well. You can tell I purposely picked this one because the Binance one isn't looking so great because of a weird thing that happened with the BNX token that I was trading. They did a reverse split, so it jacked up the performance and the stats. It's really weird. But anyway, another thing I like about this is that if you go all the way to the right side, you can see a position percentage. So that way you can see, based on your total portfolio's value, how much is being used for your trades, how much is available for you to use in regards to your quote currency, like stable coins, BTC, Ethereum, whatever you're going to be using for trading, right? So I really like this breakdown. And there's something else that I really like too. So in the chart type, right now it's set to line, but if you click the next button that says stacked, over here you can see the majority of your funds. So for a while, I was just in stable coins for a long time, and I had a grid bot running here on gas. You can see that amount changing over time, which is really cool. So now I can also see over here on March 10th, this is when I bought a lot of tokens and I started to close those positions. And then it eventually reverted back into USDT, because you can see that amount shrinks. So that's the amount of USDT I have available. And then as those positions close, then it goes back to being a higher number. I really like this breakdown because it helps you to visualize and see your portfolio's value each day, how things have changed each day, to also give you an idea of which coins are performing well. And it just gives you another piece to the puzzle to figure out what is your portfolio looking like over time. It's not just simply giving you the USD value over time or the BTC value. This way I can actually track to see how is my portfolio growing over time, dependent on what I have in my portfolio. The important thing to remember about all of this is that you are only as good as your win rate. So if you know that your win rate is low, which is okay, if you know that's the case, you're going to want to use a tighter stop loss. It's just how it goes, because if you have a poor win rate and you have a really wide stop loss in comparison to your super high take profit, you're going to want to tighten it up. This actually corresponds with a lot of trading advice and trading books that I've read, where it's much better to cut your losses quickly and let your winners ride. Let them go for a long time and just ride that wave. That's been super apparent with BTC lately. So for all of you that are still not sure about how to trade these trends, the TBO is something that does that really well, and it gives you an idea of a breakout, breakdown, all that fun stuff, the strength of the trend, so that way you can stay in those positions longer. So looking at Altrady's portfolio management tools, the portfolio analysis tools, and also the risk reward management information that's there, the features in this are insane for active and passive traders. There's actually a lot more that I want to share with you in regards to the bots and the grid bots and the DCA bots, and I'm still collecting data with my real account But so far, so great. I have some really good data to share with you, but that's going to have to happen in another video. The main thing to keep in mind, again, is that risk to reward ratios are important to figure out and establish before entering a trade. Really spend some time thinking about this. And I'm going to share the link to that image, as super small as it is, so that way you guys can just keep it in your back pocket, just save it to your desktop and have it up there so that way you remember, well, in order for me to be profitable long term, it works way better for me to have a really tight stop loss, because even though I'll be taking a loss, chances are that my big winners are going to make up for all those small losses. Ready for more? I thought so. The next video I want you to watch is my Portfolio Allocation 101 video. This video also comes with a Google Sheet that's going to help you to visualize your portfolio, looking at active and passive trading tools in a whole new light. It's going to really help you, especially when you want to start using tools like Altrady, Pinex, or 3 Commas. So watch that video next. It's going to pop up at the very end of this video. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.